Little strange for me to make a video in the middle of the day, and Friday's my chill day, so I'm about to go to the gym. But I wanted to go through this data with you because our first reaction was down, and now the market's doing something really interesting. So let's just take a look real quick. Okay, non-farm payrolls here. We were expected down at that like 170, and previously we were at 227. But you notice that number came in really, really high. Okay, this just means that the Fed possibly is not done with their job and they're going to raise rates further unless something else is at foot here. Okay, so you see that reaction down. That could be because this number came in high. And then if we just tackle unemployment real quick, 3.8, we're projected 3.7, 3.8. Previous was 3.8. We're staying steady. So this number staying steady instead of going up. If it would have went up, then I think we would have seen a good reaction, but now we did see that reaction down because it only came in right as expected, and it is the same as the previous month. This comment right here, and thank you for commenting because I do try to reply and I read almost every single one that I can. Overall, it just got me thinking of, is this still a potential bottom with this data? And the now reaction is we're getting some upward move. Now that could change by the end of the day, but right now we can read into it a little bit and say, what is the reason for this happening? And I responded with TLT could save the market today. Now, the reason I said that TLT could save the market is because TLT traders are slightly in control of that 10-year yield. And if they start to buy it up, we can force those yields to come down. And overall, what they're thinking here is maybe that soft landing is still in play. And this is actually as high rates have to go. And we're going to just stay higher for longer. So they're thinking maybe if we buy this, it is going to force those yields to come down. And maybe this news is actually that we are in a booming economy, meaning that those yields can come down and we can see stocks go higher. And if we look from a technical standpoint here, we're seeing that we're creating another divergence here on a 30-minute. Okay, so this divergence on the 30-minute can usually turn over this 2-hour, and you see we're getting that rejection down here on the MACD on the 2-hour. Okay, you're seeing we did come down a little bit. Now this could change at the end of the day. We can go right back down, but for now we are rejecting on the 2-hour. And if we flip over to yields, we can start to see that reaction. We come up into the previous high. I think we even pass it just by a tiny bit. And those bond traders say, nope, this is as high as it needs to go. And now we start to come down. And you see on the 2-hour, there is a pretty big divergence here. Okay, look at that. It comes way down. Sorry, that was a terrible drawing, but it comes way down. And on the RSI, we can see it as well. So if this continues, we could actually see those yields start to break down over the next few days. The last thing that could be telling us that we are at a bottom is we got this huge spike in the put call ratio. Okay, we have like a 1.6 reading, and every time we've seen big spikes like this, we've actually found some kind of bottom. So if this is able to keep coming down over the next few days, we're going to see that bigger pop in the market. And the last time this happened was way back here. Okay, 2022, Wednesday, December 28th. So we're going to go over to the SPY real quick, and we're just going to pinpoint December 28th and see what happened. Sure enough, it's Wednesday, December 28th, 2022 is when we did start to bottom out in the market. You notice it didn't bottom out and just skyrocket, right? We did see some chop for a few more days. So we could see some chop for a few more days, but overall, right now we are seeing that put call ratio skyrocket. And a lot of the time that could be a contrarian indicator that we have found some kind of short-term or even long-term bottom. So the overall takeaway from this is we are getting some kind of bounce as of right now. Now that could be ripped away by the end of the day, and maybe the real move is that those yields will have to go higher. But from what we're seeing right now, those yields look like they want to come down because these TLT traders. Okay, so we want to pay attention to the next big piece of data, which will be that CPI. Pay attention to what the market does before then, and I think we could see a little bit of a pop, but I wouldn't be surprised if that's just kind of ripped away on Monday. We just have to be very, very careful in this market. Right now, I am seeing a potential bottom. Thank you guys for tuning in the middle of the day. A little weird. Haven't made one in the middle of the day in a while. So I hope you guys have a great rest of your trading day. Hopefully things stay good for you out there, okay? Have a good weekend. Peace.